Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is July 16, 2012, and we are currently looking at price action on our 10-minute chart. And as you can see, we have this yellow line drawn in dividing last Friday's trading session from today's trading session. And as you can see, if you observe the price action from today, it was pretty interesting. We saw bearish and bullish moves and this whipsaw activity, and there's reasons for it. But let's first start off by looking at the left during our Asian Open, and you can see how price had gapped higher about 20 pips, and it appeared to have want to continue its bullish trend from Friday. But as you can see, price had found resistance at 22.73, and it was at this price that sentiment began to shift to the downside. And for most of our Asian and European session, we saw this bearish, risk-averse move towards the dollar. And of course, this was due to still some concerns coming out of the Eurozone periphery. But there was also some news that the ECB had changed its position for senior bondholders. That now they were suggesting that they incur losses for the Spanish bank bailout. So then this was of course risk averse. We saw euro weakness and the pair fall, and it actually fell 97 pips towards support at 21.76. And this was our actual low for today. But during the U.S. trading session, things began to shift. There was a change in sentiment that came as a result of the weak retail sales numbers that came out from the U.S. And after these poor sell numbers came out, this really encouraged more speculation about the possibility of quantitative easing, and many participants expect that Bernanke may hint towards more QE when he speaks before Congress on tomorrow. So this caused the rally in a pair. You can see how price or the pair had recovered all of its losses for the day. It broke above the previous high, and it formed a new high at 22.90, and the pair had rallied 114 pips from the session low here at 21.76 up to the session high here at 22.90. And right now you can see that the pair is currently in a consolidation, a pattern around 22.70, awaiting the breakout during the Tokyo trading session. So if I were looking for an opportunity to enter the market and place a trade, then I would have done so after the poor retail sales numbers from the U.S. That's when volume kicked up, and that's when we saw this move higher. And what I would have done, I would have entered a buy order at 21.90 upon bullish confirmation. I would have placed my stop loss on the other side of this session low, or on the other side of this low here at 21.74. I would have placed my stop loss, and I would have held on to this trade and took profit when price had reached this weekly pivot point level at 22.48 for about a 58 pip trade. So this was one entry that you could have entered after the retail sales numbers on this move higher. Now, if I were looking for another chance to re-enter the market, then I would have done so on a significant pullback from an area of resistance. So in this case, what I would have done, I would have waited for price to retrace back to support and find support, and in this case it retraced back to 22.12, and it found support near this 20 SMA line. But this was not only where our 20 SMA line was, this was also where our 50% retracement level would have been positioned from this last move up. And if I go to my 5-minute chart, I can prove it to you. If I was to draw a Fibonacci retracement from the high here at 22.47 down to the low here at 21.76. Let me try to get it right. Then you can see that once price had reached this weekly pivot and found resistance here, you can see how price retraced back to this 50% Fibonacci retracement level. But this was not only our 50% retracement level, this is also where our 100 simple moving average line was positioned. So you can see that this was an area of confluence, and this further proved to us that this would be a good area to go long or buy the Euro US dollar pair. So let me go back to our 10-minute chart. So if I was in front of my platform at this time, then what I would have done, I would have entered a buy order at 22.20. upon bullish confirmation, and I would have placed my stop loss on the other side of this recent low at about 22.10, below this Fibonacci retracement level, and I would have held out onto my trade and took profit at either this weekly pivot level at 22.48 for about 38 pips, or I could have been a little more aggressive and held onto my position and closed my trade when price reached this previous resistance. If you look to the left, you can see this resistance here at 22.73 for about 63 pips. So then, of course, these were two trades that I could have entered, and you could have also entered another trade in the later afternoon or late in the U.S. trading session. Right here, you could have entered a move upside for a few pips as well. But right now, you can see that price is currently consolidating below the high at 22.90. It's consolidating around the 22.70 handle, awaiting the breakout during the Tokyo session. Now, if price breaks to the upside and breaks above this 22.90 resistance, then we can expect a continuation of this bullish trend, and for price to reach resistance at 23.20. And if price breaks above 23.20, then we can expect a move up to 23.60 during the next trading session. So then that's what we can expect if price breaks above this 22.90 resistance, and it also breaks above this 2300 psychological handle here. But if price breaks out to the downside, then we can expect price to test our weekly pivot at 22.48. And from there, if it breaks below this weekly pivot, then we can expect price to also test this 22.12 level near our 50% Fibonacci. Well, it wouldn't be our 50% Fibonacci level anymore, but we can expect price to reach support at 22.12. And if price breaks below that level, then we can expect price to test our session low at 21.76. And then from there, of course, it would have to test the yearly low at 21.62. So then, of course, this is what we can expect. Of course, we have to wait to see what will happen during our Asian trading session. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, then, bye.